Snapchat recently reported earnings. The stock has been absolutely crucified. It's under $10 a share, and you're wondering, Eric, is Snapchat a stock I should even buy? Should I just completely throw it in the trash and not even worry about it? Is it going lower? What should I do with Snap stock? I'm gonna break it down for you today, so let's get it kicked off. So here's the stock, guys, $9.95. In fact, it's down another 1% pre-market at $9.85. Now this back March 2017, March 3rd, 2017, it was $27.09. That's when the IPO started. So 5 years, you'd actually be down 65%, 63, 65% today. The 52-week high, $83.34, and you can see it just fell off a cliff down to $9.66. That's the weekly low so far. So $9.66 is the lowest we've seen. And you can see in 2019, it got down to these same levels. Market cap right now is about $16 billion. Of course, this all started with earnings. Now, they already guided down, then they reported and actually missed guidance, I think by another 7%. So you can see 13% year-over-year growth in revenue of $1.11 billion, missed by $20 million. You can see the non-GAAP EPS, it beat by 1 cent. But the market, of course, did not like any of this, and I'm gonna show you why. All right, first, let's cover some analyst thoughts. What's going on? The analysts have been really punishing this stock, and it's just been a snowball, one after another, just kind of throwing this in the trash. This is Morgan Stanley, Brian Nowak. He moved his rating on Snap to underweight from overweight and cut the price target to $8. So that's considerable. That's something to note, $8 price target. Noting the disappointing second quarter results and weak guidance. So the guidance was also really bad. It's not likely to change anytime soon as company-specific challenges continue. Summing up the 5 factors, we don't think Snap's ad business is developed and performance always on driven as we previously thought, and growing this type of business through a weakening macro environment. Okay, so we've got recessionary type environment is likely to be even more challenging. He wrote in a note to clients, adding that the biggest takeaway from last week's results was that advertising money was spent on Snap with less return on investment and measurability, which of course is bad for advertisers. He also noted that ByteDance TikTok has been eating everybody's lunch. And as a creator that creates in all these different platforms, TikTok has really been on fire. You can see Facebook, Meta trying to do more and more, try to beat, they want Instagram and Facebook to have more reels and short video clips. Even Kardashians are complaining that they want Instagram to be Instagram, but Instagram wants to be TikTok. So they're saying that TikTok is a bigger threat to Snap's ad revenue than they previously thought. And I don't know why, because I don't know why you'd previously think otherwise. Citing that Snap's lower than expected sophistication and quality advertising business, which I can tell you too, as someone who's played around with ads on all these different platforms, this is a fact. In addition, we got Wolf Research. So Deepak downgraded Snap to peer perform from outperform, noting that forward visibility for advertising is low and it's not clear when the company's results will bottom out. Snap's unfavorable position in advertising along with high concentration of advertisers, that's a problem. Category mix and experimental ad budgeting, meaning you might just cut this off. They're just experimenting to see if Snap works. And, if things get tight, they might be the first one to go. And this is vulnerable to sustained, if not structural weakness during this downturn cycle. Now listen to this, guys. 8 analysts downgraded Snap following its, in quotes, remarkably disappointing second quarter. Analysts were already mixed on Snap. Now on Seeking Alpha, the average rating was hold. Wall Street, the average rating buy, but we look at Seeking Alpha, their quant system consistently beats the market and they have Snap as a strong sell. Now this is something we need to talk about because I remember back in 2020, 2021 in Discord, Patreon, people would always say, why aren't you bullish on Snap? And I would say the number one reason is I didn't really believe in the management and I thought Evan Spiegel just wasn't ready to be a CEO in a large company. That's just my opinion. I don't have anything against the guy personally. I just didn't really have a lot of confidence when I listened to earnings calls. One of my close friends is a broker. He told me to buy Snapchat stock, at like $12. And of course it ran hard. If you would have sold, you made a lot of money. And he kind of laughed at me the whole time and said, why don't you buy it? I said, I don't really know if I believe in the CEO. And for me, that's really important when I'm going to invest in a company. I have to believe in the leadership and the management. Okay, now listen to this. Watch this. This is a tweet. So Rich Greenfield, he said, where's Evan Spiegel? And why is he not on the Snap earnings call? This is July 21st. Don't even remember him missing a call before. Evan Spiegel, the CEO of Snap, replies, I was on the call and waiting, smiley face. Thought Derek and Jeremy did a great job. Next time, ask me a question. Are you serious? And the reply here, shareholders need to hear from you from these difficult times. Wish you would have jumped in on some of those questions. No kidding. I mean, come on, man. Seriously, your company is struggling right now and you're going to sit there and just be quiet on the call, scared to talk? That to me, that lacks leadership, in my opinion. This is the biggest red flag for me. It always has been, and it still is now. What are some other issues with Snap? So Apple's iOS privacy changes. This has impacted a lot of different companies in the business, and you think of ad tech. Greater than expected competition from rivals, especially with TikTok. Economic slowdown equals less ad spend. Revenue fell short of market expectations in 3 of the past 4 quarters. They've even downgraded and still missed, which is really, really bad in Wall Street. So negative GAAP earnings between FY 2022 and FY 2025. So they're burning cash. They're not profitable. We know they're not going to be profitable for the next several years. And this is not the market you want, this type of environment. You're missing revenue, you're burning cash, you're not profitable. And we had 13% growth. It's one thing if you're growing at 50% clip, but you're growing 13% and you're still burning cash and you're missing numbers. That's not a great situation, especially in an economic downturn. And then, of course, again, the management. So next, I want to show you a few Snap slides. I'm going to show you some highlights from the last earnings call, just really quick, go through a couple things that I think is key information for anybody that might want to invest in Snap. Okay, real quick, last earnings investor deck. Strong growth in our community, 347 million daily active users. You see the growth, it's consistent. So there's still growth here. You can see North America's in the yellow, Europe's light gray, and then that darker gray is the rest of the world. So in 20 plus countries, Snap reaches 90% of the 13 to 24-year-old population, 75% of the 13 to 34-year-old population. Significant opportunity to globally expand our community. You can see North America, 25% penetration, 99 million. Europe, you got 15 penetration, 15%, 86 million DAUs. Rest of the world, only 6% penetration, 162 million daily active users right now. And you can see on the bottom, 400 million smartphones, 560 million. This rest of the world says 2.5 billion smartphones with only 6% penetration. And the last slide here, international growth playbook. So 40 plus languages currently supported. I think that's important. 500 plus international content partners. And you can see partnerships with Samsung, with Vivo, and others. Before we go on, I need to announce that this video was sponsored by the Motley Fool. If you want to see the best 10 stocks to buy now, visit fool.com/firedupwealth. Also, check out Fired Up Wealth Patreon if you want to join our Patreon Discord. Okay, so if you're trying to look at Snapchat as a potential long-term investor, what are some of the catalysts, what are some of the positives that you can look for? Numbers are actually impressive when you think of the potential, especially in international growth. Here's some of the numbers here. 347 million daily active users, DAUs they call them. Over 250,000 lens creators have used Lens Studio. Over 6 billion AR lens plays per day on average. Over 2.5 million lenses made by the community, which is pretty big. 250 million DAUs engaged with augmented reality. So AR and VR, those are gonna be huge someday. AR is one of the reasons a lot of people like Snap. They think, a metaverse type play. Over 75% of the 13 to 35-year-olds in over 20 countries use Snapchat. So we've got a younger demographic, and there's room for this to grow, especially throughout their lifetime, if you can get people to stay on the platform. As I mentioned earlier, there's also a lot of room for international growth. You saw some of those numbers. I'm going to give you some more here in a second. Spotlight grew 59% year over year, Q2 2022. And then we mentioned the daily active users of 347 million in this last quarter. That's plus 18%. So that's not a bad number if you can get that revenue to work out on the other side. 18% growth isn't terrible on an app when you're thinking of a downturn, people are actually using it. So people are using the app and they're continuing to use it. It's growing much faster than, say, Instagram or Facebook Meta. When you think of the TAM, total addressable market, across 15 top countries by GDP, it's over 800 million people. So they've got a lot of room still to grow. The penetration rates, Japan's only 2%. So lots of room to grow there. Indonesia is 3%. Brazil is 9%. Italy is 12%, and by comparison, the United States is 66%. So I showed you this chart earlier, and you know the market cap and where the stock's trading at. Let's look at some valuation metrics. Okay, so as of right now, pre-market, it's $9.85. And if you look at some of these numbers here, short interest, right now we have 4.24% short interest, so we have 53.55 million shares short. Days to cover, 1.16. So people are starting to cover on their shorts, people that were shorting this stock thinking it was gonna go lower, and that's gonna continue to happen happen and drive the stock lower until those shorts are kind of gone. That's usually when you exhaust the sellers, and that's when buyers come in and the stock can go higher. So we've got a little bit of time, and it's important to keep an eye on that short interest. So let's look at the price to sales ratio. I think that's really important on this stock. Right now, it's 3.528. That's as of July 25th. It's a little bit lower than that with pre-market. So if you look at this, guys, here's a chart that kind of goes back to 2018. And this was a 24 price to sales back July 25th, 2017, actually. The lowest it got in 2019 was about 6.5, 6.4. During the pandemic sell-off, it got to 7.59. It's trading at probably the lowest price to sales ratio that it's ever traded at. It's out of fashion right now. Of course, we had some bull runs in here, but in 2018, the market was pretty terrible, and it was still trading at 20, 25. Even at the worst, it was down to 14, 15 price to sales. So you can look at the price to sales and say, it's getting pretty cheap here, and you might want to consider, looking at it a little closer. The stock might go a little bit lower than it's at, but 3.5 price to sales ratio, it's getting pretty cheap. The problem is it doesn't have the growth to support much more than that, and so the stock's going to continue to have pressure. All right, guys, Snapchat, final verdict. Short term equals a sell. You saw the $8 price target. Right now it's trading closer to $9.50. I think it could easily get down to $8, and that's probably an opportunity to buy the stock if you're thinking very, very long term. Pressure will remain on this stock, especially if the economy continues to have a downslide. If we go into recession could make things much worse. Long term, if you're thinking long term, buy under 10. I think $8 would be my target, but under $10, you're probably going to use DCA or dollar cost average. I think it will go lower than it's currently at now. Thanks for watching, guys. If this was helpful, drop me a like, drop me a comment, share this with a friend. I appreciate your time and attention. Hope you have a great rest of your day. Take care.